back home, when we're talking about markets back home, a CRISIL study shows that mid-cap stocks yielded more returns when compared to large-cap stocks and are less volatile. Sandeep Sabharwal, Senior Director of Capital Markets at CRISIL Research, now joins us with more on the study that CRISIL has done. Sandeep, thank you for joining us today. Take us through the first of your finding. You're actually saying that the mid-caps have outperformed the large caps.
Yes, thank you, and glad to be on the show. Yes, the common public perception is to actually invest in mega cap stocks because they are perceived to offer higher returns at less risk. And so we just wanted to test that hypothesis. And for that, we took a representative of the large caps, which is the Nifty index, and for the mid caps, the CNX mid cap index. And we found a very interesting phenomenon. We found that over the last 10 years, mid-cap stocks, actually the mid-cap index has given 23% annualized return, while the Nifty index has just given 19%. What was further surprising actually was that the mid-caps actually had a lower volatility, and if you consider volatility as a measure of risk, then sort of lower risk than large caps. So that was we decided to test this further and said maybe this is happening in 10 years. What about other time frames? And we found that over a 5-year period as well, we got the same results. Higher returns and lower risk in mid caps, and even from inception date of early 2001, 2003, we found again the same results.
Sure. Just to sort of dig in a little deeper on the aspect of volatility, Sandeep. At the end of the day, you're comparing indices, and some of these constitution of indices changes very periodically. Just for the benefit of viewers, what was the constitution of the mid-cap index, and how different has it been with the large-cap index over a period of time? Has this change in volatility been lesser because of the composition of these industries and the business cyclicality?
That's a very good question, actually. So yes, it has got a lot to do with the constitution of the index as well. The Nifty index is the first 50 stocks by market cap on free float, and the CNX mid-cap index is the next 100 stocks. So the overall portfolio in the mid-cap index is diverse. More importantly, if you look at the constitution of the industries in this index, you have a lot of high-growth industries, including pharmaceuticals, consumer, and banks in the mid-cap index, while the large cap, the top 5 industries over there are banks, obviously, but then you've got software, which has not done so well in the last few years, and then you have a lot of oil and gas and industrial stocks. So yes, the sectors that constitute the indices also play a very big factor.
Have you drawn a similar inference as far as mutual funds are concerned, those that invest in mid-cap funds as opposed to the large cap or the balanced funds?
Yes, we found a very high correlation with that. So we tracked, mutual funds which track the Nifty index, and we tracked the mutual funds which track the mid-cap index, and we found that the ones that track the mid-cap index actually outperformed the ones that track the Nifty index. Now over here, I just want to give a caveat. It's not that every mid-cap index outperformed, the large cap index, but on a weighted average basis, mid-cap indices, mid-cap funds actually outperformed large cap funds. But there was divergence in the individual performance as well. So, the difference between the top performing and bottom performing funds was high, even in the mid-cap.
One final question, Sandeep. For an investor who's looking at investing in a long term, how does one read this inference or the insights that you've made in this report?
Right. So I think the sort of key takeaway over here is that it's always good to test public perceptions. The public perception still holds that if I invest in the top 10, 20, 50 stocks, I'll always be safe and get higher returns. So one has to look at a broad, diversified portfolio which constitutes both the large caps and the mid caps. Ultimately, it's really very well diverse portfolios that perform well over a long period of time.
Sandeep Sabharwal, we leave it there. Many thanks for joining us with your perspective. Good talking to you. Sandeep Sabharwal from CRISIL on the report comparing large cap and mid cap indices over the past 10 years. Out of time on the show. Thank you so much for joining us in business today.